Hi, morning everyone. So today is the 21st of May. It's a Tuesday. So let's going to do a recap. Just 1 second. Okay, so I'm going to recap on do a quick recap on the analysis that I did, sort of trade ideas I was looking at. Um, First of all, I also want to take a look at this trade that I've been following for quite some time. It's the pound yen, and so far it's progressing the way that we want. So the idea is for this to reach up there, and from here is where you should start looking for the sells. Now, if this did something like that, then of course you look for the sell somewhere down, right? But if it made its way to the top, here also you'll be interested in the sell. So either way, I will be interested in the sell once it crossed out of the box and did a time factored swing, right? So uh, so right now, so if you're at this point, it's where you'll be looking for the sell. Now the entries, if you were very aggressive, you will take the sell here, stop will be above, but this is not something that I recommend. So what I always recommend is something like this. See that? Something like this. So your sell will be somewhere over here, now, on this side. Remember, swings always have something in between. Correct swing always has something in between. Trying to pick a top is not an easy thing to do. People who pick tops usually have some kind of entry strategy, like maybe RSI overbought, oversold, something like this. Maybe this went up like this, and then decide to sell at the top, somewhere here. But that's not something that I recommend because things can go wrong when trying to pick tops and bottoms. So if you wait for this price action to go up, come this way like this, and then you sell, well, at least the structure to support the next move down. Yeah. But that's my suggestion. If some people are good at RSI oversold, then that's your strategy. What I'm trying to do here is more like to show you the timing and the price action and time action, right? On when to actually enter trades. I've seen traders go into serious drawdown because because the trade management part is not so good, right? So even though the trade finally goes in their way, but maybe they had to go through a huge drawdown before it actually happened, and let's try to avoid that. So right now this is progressing properly. How far can this go? Right now is the time where you just sit your hands and do nothing. If it wants to just pop back up like this, then that's where stops should be taken out. So right now all you have to do is just trail it. Because if it goes all the way down, then it would never come out and take out the stop loss. If it does take out a stop loss, that means it must be going to some kind of correction or it's reversing. But in any case, we know how to deal with that when the time comes. Right now, it's just to do nothing, just let the account grow, right? So this was this trade was seen. This trade was I was looking at this months in advance already. As you see here, this was on December. At the time, I remember the pound dollar fell drastically, right? And there was a very good pound sell. Then on in December, so now it's almost February, March. So looking for the sell was, I mean, this was already planned 3 months in advance. So that's the amazing thing, right? 3 months in advance, you're looking for a sell on the pound yen already. Very long term trade, right? Okay, so let's go back to uh, let's go back to some of the more current trades that I'm looking at. So let's look at the DEX sell bias, right? Let's see what's going on here. Right. Now, the interesting thing about this DEX, right, is when this one was here, right? I was actually looking for this move to go up there. Now, if you look at some of my different chart, You know, I mean, some people might be confused. Say, Sherman, you're looking for the DEX buy here, this one. Now you're looking for the DEX sell. Yes, it's true. It depends on how these prices are moving to the upside. You see that? I'm gonna press play. So right now, I'm saying that now I'm looking for the down. But then in like the week before, I was looking for the upside here. So down or up, I should make up my mind right now. The thing is this: if price action was to come up like here in the sideways, yes, I will be looking for the up because see, this is what I did, right? If price action just simply shot straight up like this, I'm very wary that this one can do that and then it can go up, or instead of just doing this, it can do that. So either way, the likelihood of the downside must be there, just like chess. There are a few moves that he can make. So the opponent might make move his knight, his queen. So you got to see all the different moves. You could do this, number one. You could do this, number two. And once it does this, this could be that. You see this, and then followed by this down move. So this possibility is there also. Right. If unfortunately when it broke out here, it didn't do this. If he had done this, then the likelihood of this going up is much higher because why? It has this to support the upward move. That means when this stuff happens, it means that orders are being swapped out. So it gives the candle more momentum to keep pushing. You see stuff like that. It means orders are being swapped out. There's enough momentum to push. But when it goes up straight like this, you gotta be very wary. You see, when it goes up straight like this, even though it finally got here, but imagine you just bought here just to make 10 pips or something also. But oh man, look at the amount of drawdown if you just enter right here. Then you suffered. You suffered all the way down, you suffered all the way up. Finally, you break even just to get a little bit of success, right? So at this point in time over here, to me, this spot over here is a lot like this spot over here. If it continues to go, I would rather not take the kind of trade because to me, it's a low probability type of trade. But you see stuff like that. Even here, see, it gives you that. So we have to see what this actually gives you. If it gives this and it breaks, it's going again. But if it does not, so price action is going to come down this way, or it's going to plunge down this way. It's going to give you either one of this or one of this. But whether it gives you one of this or one of that, these are both tradable, right? But this continued sustained move to the upside, it wants just straight candles. This is not sustainable. And if you enter just like this, just because it looks strong, well, it's not a good idea. So what we're looking for is some kind of downward move like this, or candles just plunging down like this. That's why at this top, you're looking for the sell, not the buy anymore. Okay. So just make that clear. That's price action and some time action there as well. So that's why on this DEX looking for the down. And this is the most optimum move that it can make. But what if it just does something like this? Like this, it is going up again. So right now at this spot, this place in time, the most optimal move would be to look for the sell because it has not made a correction yet. At the very minimum, it has not made a correction yet, right? Something like this one. It has not done something like that. It has not done something like this. It's just straight candles, right? It's not safe to just buy like this, right? Not a good idea. So let's just look at this is Singapore stocks. Okay, never mind, forget about that. Let's look at EuroCAD. So this one, what was this? EuroCAD. So it came here and it broke this low. Okay, so I got it. Let me click on that again. So see, price action is now over here. What we want is just a reaction here, then you need a swing, some kind of structure in order to break this high. Remember, I said that price action don't. Usually, what you want to see is a bigger one before the move can be sustained, right? So over here, once it comes over to here, you're looking for just one quick move. Is out, just get out of trade, because once it reaches there, anything can happen. It can continue up. It can break down. See, so in this case, it went up to the 50, then it broke down, right? So which means this move. That's why it's a dotted line. No point thinking about this if you don't get a broker in between, a broker or some credit structure. A broker, I just call it a broker, meaning that if you want the first and the third, you need someone, some kind of middleman to allow the move to be sustained, or a broker in between, right? So that's a good one. Eurocat. So let's go look at gold. I'm just moving down all the live charts. So you can see price action continued down. It was always going to be. I mean, this moves here. There's no. It's easily cracked. You see this level here. It's easily cracked. So when you saw something like that, your target will be right to this low, the minimum. This is quite standard stuff. So you can put big lots on this because it's pretty clear. Some people might say, why can't it do that, right? Why can't this at this point? Because this is strong. Why doesn't it do this? Like, they say this. Well, unfortunately, I would say if you're good trading, it's not. This is a good idea to follow, but knowing how to play around with this idea, is important, right? Because this did that too. It did that too. So this idea and this idea is good, but this is just the theory of it, right? The actual application is not so simple. The actual application to actually do it, because even if you know this theory, it's very easy to go into very huge drawdowns, especially when you see something strong like this, and you think it's going to go. Well, but then look what, it just keep breaking this low. You see here? It broke that low. So it didn't do that. It didn't do that at all. So again, this is it's like E equals to MC squared. It's a good idea, but it does not make money. This idea itself cannot make money unless it's properly applied. You need to properly apply that idea and know whether to be bearish or bullish, because one side is going to fail, right? One side is going to fail. Okay, so in this case, this side succeeded, this side failed, right? This side failed. Let's do that again. This side, this never happened, but this side happened, right? So the application is important, right? So Aussie is one of those trades where you see, again, if you try to get in too early, you're gonna be ready to go in for a drawdown or very small lots, because see, it went even lower. So if you wait for this kind of side moves, we reduce the drawdown, right? Reduce drawdown. And this kind of, if let's say you got a small account, it's always good to wait for such things, because sometimes we might be on the right side, but the drawdown actually wipes out the account before it actually turns, so the move still looks up, but you're always looking for some kind of a broker right here before you take the next move, okay? Basically, this is a middleman to connect the first and the third wave. Some kind of middleman right there. Okay, so this Aussie buy. Kiwi is pretty much the same. So if you catch this move, you really do catch it. What you don't want to see this come break this low, right? And this can also be this. Yes, it could be here. Remember, there's a 382 here. You flip from this to that. It goes up here. So again, it's the exact same thing as Eurocat that we talked about just a couple of minutes before. Over here, you want to see here sideways before the move can be sustained to the upside. You want to see that. If you take this buy, but you don't get out of it. Yes, it might go, but it might also pop, come on all the way back down. Like it come down here like this, like this, like this, and then it just drops, picks up this low, then maybe it goes up. This is all maybe, all right. So don't take that to heart. But what I'm trying to say is that this move up here, at least to here, it's a good idea, right? It's a good idea. So take note of this. Let's look at the Euro Cell. What's Euro Cell doing? So Euro Cell, the bias is down. So now the reason why this bias is down is because okay, let's go back to the original thought. So this is where we must talk about the basics, right? Basic, you're thinking about this. But is it so easy to apply it? Well, let's see the application of it. This is here. This part here is actually supposed to be this part over here. This is the application of it. But is it really so easy? Because I think some people have this notion that the credit structure has to be something like this before it goes, some kind of flat. But you know, that's not always the case. In this case, if you actually look at the structure of it, right? What it actually, this was all the correction. Some people say, I think this was the correction, Sherman. Well, you see here, when this low was broken, it said this is a something like this. To me, you could call it that on hindsight, but when you're actually trading it, I would not call it that. I would not call it this at all. 5 years ago, or maybe 3 years ago, I would have called it that. But now I recognize that sometimes structures can be that. Basically, it's a stop hunt. The stop hunt just to take out the orders. This is all the correction. And then this is actually this move down this way. Here. So all this right there. See that? This is actually one single wave coming down, which is this wave. See, I do this. So, but whether it did this, is still down. All right. Whether this is a sharp move up, this is just one wave up by itself, and it did this, it's also down. So, regardless of the move that price action made, right, it would have still been down. Basically, that's it. Okay. So knowing how to be more versatile with the idea of this, knowing how to play around with this is an important thing, right? And that requires a lot of chart time, basically. You need to spend more time on the charts. Okay, so this is on private. What was this? Let's see what this was. Euro Oz. Did I trade this? Let me think. So here, did I put this down? I didn't trade this. No, this is daily. Sometimes I have too many things on, so I didn't trade this. But oh, so it's not happened yet. Oh, that's great. So now I'm looking at it again. Yeah, basically this up. So here broke this top. So remember what happened to euro dollar? Yeah, that's right. Euro dollar. Remember how it one sharp move up, took out the high before it started to come down. Yeah. So if it does something like this, you're looking for the sell. Correct. So this one long time in the making. Don't need to worry so much. But what if it does something like this? It takes a long time. You chop like this. Oh, then this is going up the biggest top. So not much to do. Just wait. See. Perfect. That's all the good stuff, man. That's all the good stuff right there. All right. What's this goal? Let's see what this. So sometimes trade ideas they come, they go, they come, they go. I don't worry too much about them. This came down pretty fast, yeah. Too sharp for my liking. Now you can't do anything about this because this could be this, could be this. Here will be a good buy. You're gonna look for some kind of reason to actually get in, and it's going to be some kind of first wave that they're going to try to pick. All right, because the reason why you pick this first wave because this is like a tree drive, you see, right? First, second, and the third of some sort, right? Let me see, this looks like this. This looks like a 1 and a 2 and a 3. Okay, so the immediate move for this one, because this is so strong, so you're thinking this is sideways. You're thinking that this could be one more drop. That means this one cannot break. Right, this one cannot break. So when I put this one up, right, it means that if this did this something like this and it came down here, then you have to be very careful. Because if it does something like this, that means this could be that, and then now this is this. Remember this idea like this? So you just have to make sure that this does that. This could be this going to the upside already. Now, what if this one just does this and then it just comes here? But you cannot buy. You cannot buy it like this, right? It could just come and break this low. That's why it's not a buy. You come here, then you just make a slow turn, something really stupid and messy. Like it looks like a correction going down, but then actually just bursts up this way. So, so what I'm trying to say is, this one looks more like a sell, and what you hope for is some slow structure like this. You see this stuff here? See this stuff here? There's a broker in between. So you look for some kind of broker in between before you can decide what to do. And once this is happening, just don't touch it. Don't do anything. If he wants to stop you out, let it stop you out. If it doesn't stop you out, it's going to break this low. Basically, that's it. Right? If it decides to here, it decides to stop you out. If it makes a little pullback, any kind of little sideways, you can try to take and break the stop. So it depends on what price action does. Then we decide what to do. Right? So go looking for the sideways move. So DEX, we talked about it. Let me see. I just cover maybe until 9th May. Let's look at this. Well, let's see what this is. Pound dollar. What was this? Looking for the sell. Oh, okay, this is a good learning moment over here. Basically, this looked like a leading diagonal to me. Now, some people say, but why is this not this? Why is this not this? Why is this not... What I thought impulse correction, impulse. Well, not so simple. Not so simple. You see, it can be so sharp like this, and then it will still drop. All right. Let me just check that out. 1 second. Although on hindsight, this looks like a good idea too. They call that they could call that a running flat, but running flats, they are. This is not an easy running flat to spot. I would not have spotted this as a running flat, to be honest. I for this more as a leading diagonal coming down like this. Right. Running flats, I like to call structures running flat and more as a way of convenience on hindsight. But what I prefer is time-factored swings. So here, I would prefer it to be on something like on this side. Here, I will sell it now. That's my standard. Right, always outside. So, but now that this one has come down like a, I mean, if you want to call it a running flat right now, that's fine. But the next move for this is you wait for a pullback. You're looking for the next sell now. All right. So the pullback can always be sharp. It can always break this previous top. But once it starts to do this, it's also coming down again. So the immediate move right now is you need to look for the buy, because the buy is going to be something funky. It can be something funky like that. It can be straight up like this. But in any case, the move that you want is to the upside, because why you want this to do something like that. Because this type of action, right, will throw people off their trade. It's the kind of action that makes people lose money. So if you can see this kind of actions, the price action can take, that's when you can make money, right? Like this one, see this stuff that goes up, you see here? This last part that wakes people up before it goes. You see, this is the stuff that you can get in on this kind of stuff, you can make money. So someone is getting screwed, you see. You're gonna screw somebody here, this sort of stuff. This is all reaction trades, bump. Screw some people, swing continues up. So these are the stuff that makes people lose money, and this is when people lose is when you can make quick, fast cash, but you got to be able to spot it. That's the main thing. So right now, what you're looking for is, see here, if this one has broken the previous low, and definitely there must be stops over there, because some people just play support resistance. They thought it's supposed to bounce. Well, guess what happened? It broke that. So now, if somebody was forced to sell, because people may have bought here, Now they're all forced to sell here because it broke the low. So if somebody would sell and smart money decide to buy, well, it's a good time to push this up so they can buy low. Always remember, buy low and sell high. Sell high. So once it goes up here, they can sell high and then they can drop back down and do all that good stuff, right? So what you're hoping now is for this to go back up, right? So that makes that put some pressure on my pound yen, but let's see what happens. Anyway, this kind of move, due for correction. To be honest, these things just can't move down forever. Although pound yen can be quite a monster, but still this has moved pretty far. It's moved pretty far already. You see, they moved pretty far already. So if you look at this size and this size, it's moved pretty far. I would not dare to sell that anymore. Right? It's a place. If you were to sell, I was not in this sell. All right, but if you're going to sell, it's time to move the stops. Because again, if I wanted to sell this, it would have been something like here or over here. Those are good sells. In fact, over here it came down here. If this had done, this is actually a good buy, right? Okay, so I didn't get this one though. Not a move that I believed in. Okay, last one, euro dollar sell. What's this? So this one is something that you're looking for something like this, right? So you kind of don't want this to break. Basically, that's the basic idea. Remember the basic stuff. Chop, chop, chop. That's it. So and it's nice when things play out accordingly. So always wait for some kind of broker before you take the next move, right? You decide to make a bigger one before it makes the next move. So it's getting there. The only thing is to try to move stops. That's it. Okay. Pretty slow at least. Right. So I'll just end here and stay safe and trade well. Bye-bye.